My name is Sarah Sterling. I'm the Executive Director of Programming and Convening at SOCAP Global. I'm so happy to be here with you all today. I see a lot of familiar faces, some new faces, and I am going to introduce you all to our Funder Showcase for this year. This is the third year that we've done a Funder Showcase. The original intent behind doing a showcase at SOCAP for fund managers was really to create more transparency for flow of capitals. And really to give a spotlight to fund managers who might be looking to invest or might be actually looking for investment from LPs. So I'm so excited to introduce this year's 2025 Funder Showcase presented by Wells Fargo as well as Variant Investments. And with that, I'm actually going to hand it to Variant Investments to get us kicked off.
Good morning. My name is Hicks, and I'm head of impact at Variant Investments. I'm joined by Ryan Warren, our director of IR. And it's such a pleasure to be here with everybody. Last time and first time I joined SOCAP, I was launching an impact fund with the foundation, and it was the first time I saw finance and purpose collide. Characters and character emerge. Today, I'm beyond excited to be here with Variant Investments, a impact private credit interval fund. I know that's a mouthful. And talk a little bit about what we do, who we are, and why we think private credit is a beautiful expression for impact.
Great. Thanks, Drake. Yeah, good morning, and thanks everyone for attending. Variant Investments really originated from an idea within an investment consulting firm where the founders of Variant saw a lacking of flexible credit investments within the kind of investment opportunities within the fund. And that's really kind of what led Variant to be launched in 2016. Today we manage about $2.8 billion across niche private credit investments. From there, really found a lot of opportunity where we're looking for market rate return, but also dual outcomes. And so in 2021, we launched the Variant Impact Fund. To Drake's point, is a private credit interval fund structure. So it provides access for investors to invest on a daily basis, quarterly income of distributions, and access to liquidity. A really unique solution where you have a multi-thematic approach within impact investing.
Perfect. So where we touch upon impact themes, we hit three major themes of financial inclusion, equitable growth, and responsible consumption. What belies this pie chart is we are always looking for ways to be part of the just transition. So whether that's decarbonization of EV, lease-to-own models in Kigali through a deal called Jolly, or we're looking for making sure we're tapping into underbanked populations. For example, Zanifu, 65% of borrowers are women, 2% loss rate. Responsible consumption is our last theme. All of these themes are present in the Impact Fund. We were doing this work generally in the traditional fund, but in 2021, as Ryan said, we wanted to interrogate them, enunciate them across a 7-step process. So we think about exclusions, we think about ESG, we think about the need, so additionality, what is the alternative form of capital. We then think about the SDG alignment. That's a broad stroke thematic adjustment there. And then we use it as a piñata in our 4-step impact assessment framework, which we co-developed with Tideline. We look at then IRIS Plus to report out externally, and then think about DEI also. So we have a very rigorous process for the expression of our themes. Ryan, do you want to do some case studies?
Yeah, absolutely. So largely what's in the portfolio is asset-based lending transactions, where we're working with groups that are in the business of lending or purchasing receivables. Think of some asset that's on the balance sheet for these companies, but they're looking for growth. They're not looking to give up any additional equity. They probably have equity backing that's properly in position. So they're looking to grow based on the assets they have. These could be energy rebate factoring transactions. It could be affordable quality homes. It could be loans to small businesses. That's very flexible on our end, where you need to be flexible to meet the needs of these underlying businesses. And so for 2 examples, the one up here on the screen is Castle on affordable quality housing. This is an investment that we have a note structure with, but the goal is to help acquire and produce affordable quality housing in the state of California. So we've created 775 transactions and buildings, all green led, as well as have great metrics around the percentage of underrepresented founder groups that are tenants, as well as the market rate, which is controlled within the state of California. Next, one of my favorites, because as you all know, none of these themes are perfectly fit in a single box. You can have financial inclusion that has clean energy components. So in this investment, well, very much a financial inclusion investment does have a clean energy component. And so this is a lease-to-own motorcycle financing platform, where essentially you're providing a lending solution for individuals or small businesses to gain ownership of a motorcycle. But within the collateral that you're lending against, it's not only petrol-based, but EV-based motorcycles. And we purposely created a solution to transition from petrol to EV, where 60% of the fleet today is EV-based motorcycles. With that, thank you so much for the time. If you're looking for learning more information about the fund, or if you're a business looking for expansion capital on the lending side, please find us at the event.
Thanks, everyone.
I'm Christopher Johnson with Wells Fargo, and I have the honor of introducing today's cohort. First, I just wanted to extend our sincere thanks to SOCAP for organizing today's session and giving Wells Fargo the opportunity to sponsor this important gathering. We deeply value the partnership and the shared commitment to driving meaningful impact through capital. At Wells Fargo, we believe that good things happen when investment capital flows to emerging fund managers, those who are closest to the communities and the entrepreneurs they serve. These new funds play a vital role in unlocking access to capital for growth-oriented small businesses, especially those that have been historically overlooked. Today's showcase is more than a pitch session. It's an important first step towards building relationships, sparking conversations, and ultimately catalyzing the movement of capital where it can do the most good. We're excited to be a part of that journey. So with that, I'll introduce the order of today's group, and then we'll kick things off. First up, we'll have Sabari Raja with JFFVentures. Following that, we'll have Allison Kelly with ICA Fund, then Grace Lee with AMH Impact Fund, Allison Swagler with Bronze Valley, and we'll finish up with Heather Matranga from JFFVentures. I would ask everyone to obviously enjoy the presentations, and then afterwards, please stick around. We'll have a second session for networking and facilitated conversations. So with that, I'm happy to kick things off. Sabari.
I'm Sabari Raja, Managing Partner, JFFVentures. I'm excited to tell you a bit more about our Economic Mobility Fund 1, but first a little bit about myself. I grew up on a coconut farm in South India to parents without college degrees. My path from there to here has not been a straight line. And Yigal, who's the co-managing partner, his background is similar. As an immigrant, he went through community college first before he found his way to a four-year college degree. So together, we share the same mission and passion, but we come to the table with complementary skill set. I've been an exited founder, operator, taken a company from idea to exit, while Yigal has worked in impact investing for over 16 years, the latest one at Rockefeller Foundation. So together we built a very small but mighty team. Everyone on the team shares this immigrant journey. They care about the purpose of the fund and the mission and what we do. So what our fund focuses on is we have a very focused thesis. We invest in technology solutions that drive economic mobility for middle to low wage workforce. What do I mean by that? Over 40% of working adults make less than $45,000 a year. Many of these workers do not have high school diplomas, let alone college degrees. In this age of AI, where AI is completely transforming work, how do we not leave this population behind? That's the goal of our fund. How do we build bridges instead of barriers? So what does this mean from an investment perspective? We are an early stage fund, one of the only early stage funds that's focused on the entire journey of the worker. From what kind of skills do they need? That's the education technology. Once you have the skills, how do you give them access to quality jobs, workforce tech? Once you're in a job, what do employers need to support the upward mobility of this population? HR tech. But the most important thing is the wraparound support, which is what does this population need outside of work to thrive at work? That's benefits, childcare, transportation, access to credit, etc. So one good example, this fund we've already actively been deploying, made 6 investments. The first investment is in Pace AI. The founder, Victoria, she comes from a similar background, like many of us in the fund team. So her background, her parents were immigrants to the country. Her dad was a mechanical engineer by background, came to this country and only could get a first job as a dishwasher at a restaurant. Not because he didn't have the mechanical engineering skills, but because he had language as a barrier. So that motivated her, her lived experience motivated her. She quit her PhD at MIT to start this company. It is the first of its kind end-to-end AI agent that is focused on ESL learners to help them acquire the English language skills in learning technical content. This is not 0 to 1 English learning. Since they've launched, less than a year, over 100,000 ESL learners reached. And from a financial perspective, they're also growing tremendously. These are the kind of companies we want to support that's balancing finance and impact, financial returns and impact, so it makes sense for all stakeholders involved. That said, we are a $40 million fund. We've raised $26 million to date. We have amazing strategically aligned LPs, and we'll love to tell you more. And here's my contact information. Thank you.
I'm Allison Kelly. I'm the CEO of ICA Fund, and I'm thrilled to be here with you all today to tell you about Courtney Smith. Court Smith was born in Oakland, and he has a passion for basketball. And in 2014, he started a basketball apparel company. And he came to ICA and he said, I want to join your accelerator and I want to get investment from ICA Fund. And we said, awesome, you're not ready. You don't have enough traction yet. You have to come back to us. So he came back in 2017. He joined one of our workshops. And when the pandemic hit in 2020, we developed a zero interest loan program for entrepreneurs who needed to pivot in the moment of the pandemic. This was before PPP loans, before EIDL loans. And Courtney came back to us and he said, can I get one of these? And we said, absolutely. That $50,000 gave him the runway to change his athletic apparel company, making basketball uniforms, into a company and a brand that made very cool looking apparel for off the court. So his company grew. And in 2021, he was ready to take a $325,000 convertible note investment from ICA Fund and continue to grow his business. He went from $500,000 in revenue to $1.2 million in revenue. And then the very next year, he was doubling again. He came back for straight up equity, and we invested. And we converted our first convertible note into equity. Why I'm telling you this is because Court has continued to have the grit and show the resilience and the perseverance it takes to be a successful small business. And in 2024, he hit some headwinds. His manufacturer overseas closed. He lost inventory. He lost over $100,000 in cash. This was a disaster. But he came back to us and he said, what do I do now? And we said, hey man, let's build an M&A strategy for you. Maybe you can acquire another business. And he did. With our help, he helped identify and structure an M&A transaction, which allowed him to immediately become profitable, join and welcome in 7 new folks into his team. So now his team went from 4 in 2014 to 25 in 2025. And his business is profitable, and he acquired a complementary business. And I'm telling you this story because Court is a phenomenal entrepreneur, it's true, and we're going to continue to back him. His story is not over, right? Yeah, so now he got this new opportunity, but he still has to realize that opportunity, and it's hard. But he's not alone. We support 61 companies right now in our portfolio with flexible long-term capital that takes the shape of, like I mentioned, a zero interest loan, we don't do those anymore, to convertible notes, equity, and an M&A transaction. So some of these companies are some of the most iconic brands here in the Bay Area. Shout out for my Bay Area peeps here. Thank you. And we do this work because we truly believe that small businesses are the heart of our communities. We all know this. We all go out on the weekends to get coffee or go shopping on the street because we want to be part of these small businesses. They make vibrant, connected places to live, and they drive real economic power. But often investors overlook these markets, especially from historically overlooked demographics and geographies, and that's what we're here to change. But we can't do this alone. We've been at it for 29 years. Next year is our 30th year. And we are asking you to join us and get in touch with me to help support this work to keep it going forward. Thank you.
My name is Grace Lee. I'm co-founder and GP of the AMH Impact Fund. I grew up in a family full of resilient entrepreneurs who built something from nothing with nothing but grit and lived experiences. And that ingenuity is why you see me here today. Now, there are millions like them who have that same drive, that same resiliency, but have even less access to capital. And it's not to overlook these founders is not just unfair, it's actually bad investing. So AMH, we see two clear opportunities. One, there is a massive reindustrialization wave happening right now. Trillions going into global climate investments, hundreds of billions going into US manufacturing. Everyone has a FOMO when it comes to AI, but it is the physical infrastructure that's actually going to solve the existential crises such as climate change. And two, there are a persistent and insidious funding gap. Year after year, women, especially women of color, get just a tiny fraction of catalytic VC dollars. Now, this is very detrimental to innovation, and this is why we come in. AMH invests at this critical juncture, unlocking untapped talent who are driving real innovation. Now, it's not just about equity, and it's not just about being fair, it's actually the data. Data shows over and over again that when you invest in women, you get more revenue, more ROI, and you do it more efficiently. And the problem is, though, that the vast majority of capital continues to flow to a certain type of founder, the kind that has the same degrees, the same background, the same networks. And this is our alpha. We are intentionally investing in overlooked, promising founders, and we are intentionally focused on sectors that are essential and necessary for the future prosperity of everyone. And we also have a few key, unique secrets to our sauce. We have a collaborative partnership with the AMH Catalyst Center, so we have a curated deal flow. We are an affiliate fund to the 22 fund, so we have the back office, we have the industry expertise, and we have a pathway to growth stage capital in place. Through our combined 40 years of experience across sectors, we have deep networks that are convertible, meaning that these aren't just our friends and allies, they're actually business partners ready to make deals. So we also have a pipeline being developed and in place, which I can talk to you about later. Now, what we are looking for are mission-aligned investors, but I would also love to talk to those folks who are interested in working with us in other innovative ways. And I couldn't finish this out without introducing you to my incredible team, Jenny Flores, my co-founder, and our strategic advisors at the 22 Fund. Now, I often get asked, where does AMH come from? And it's actually a commitment to our very entrepreneurial daughters, Angie, Maddie, and Hannah, and to all those who are like them, who have the potential to change this world and just need the chance to do so. I welcome you to join us to empower the next industrial revolution. Thank you for your time.
I'm Allison Swagler. I'm the Director of Development and Partnerships for Bronze Valley. We are a CDFI venture platform that backs under-resourced, high-potential founders all across the U.S. Our model combines capital with mentorship and tangible technical assistance resources to really help our founders scale. I don't think I'm going to shock anybody here when I say that startups in emerging ecosystems are chronically underfunded. So not only is that challenging for the founders, but it's also a missed opportunity for regional growth, and economic development. So we were created to offer funding and support to those founders in those areas with a larger goal of sparking economic opportunity within their communities. But beyond these considerations for the founders, when founders overlook these funding opportunities in underfunded markets, they're also missing out on really strong investment opportunities. So we are able to build really strong ties with our founders. We're able to get in really early on these investment opportunities and build really deep relationships. We were founded in Birmingham, Alabama, which is where we're headquartered, but we've invested in 20 states, companies in 20 states to date since we made our first investment in 2018. So to date, we've invested in 62 companies, typically at the pre-seed stage, typically as the first institutional investor for these companies. Together, the companies have raised $112 million in follow-on capital. They have generated more than $160 million in revenue, and they've created 750 jobs. 51% of the founders that are in our portfolio are women. About 87% are located outside of major tech hubs, and about 84% are under-resourced. So one thing that I'll add that is not on the slide here, since we made our first investment in 2018, our wraparound approach has been really successful. So I think that of those 62 companies, maybe 4 of them have ceased operations since 2018. We've seen 1 exit so far, and the majority of our investments are still active and growing and really strong. So because this has been successful so far, we are currently in the process of raising a fund that will increase our capacity to make follow-on investments, continue investing in our founders as they grow and start to raise Series A rounds. We think that our track record with this early stage investment vehicle puts us in a really strong position to do this, and we'll continue to have deal flow from Bronze Valley. This is a very quick look at some of the investors that have supported our work. A very quick look at some of the companies that are in our portfolio. So we're industry agnostic, and our portfolio ranges from health tech companies to CPG to B2B SaaS. Our wraparound services are a really big part of what we offer our founders and how we help them succeed. And so those services are housed within something we call the Bronze Valley Venture Lab. The Venture Lab includes our accelerator programming, which targets 3 different stages of the entrepreneurial journey, and our C-Suite On Demand program, which is a free consulting for portfolio companies. The consultants that we engage range from legal support to accounting to even wellness benefits for our founders. We also have 2 tiers of accelerator programming for startups, a free program, an equity accelerator, and then we have a university innovation program. And together, these programs have served nearly 1,000 student entrepreneurs and 80 startups to date. I'm going to skip the rest because I knew I was going to talk too long. So would love to talk to anybody in the networking portion and get more into the details, but thank you so much.
I'm Heather Matranga with Village Capital, and I'm really excited to share with you our newest fund, SOCAP25, a $10 million fund focused on enhancing economic mobility for low-income communities in the United States. I'm going to tell you about 2 companies that exemplify this impact and how we're supporting them. First, we have ThermoShade. ThermoShade is addressing one of the biggest challenges of climate change, extreme heat, which kills more people in the United States every year than tornadoes, hurricanes, and floods combined. ThermoShade's panels reduce outdoor temperatures by up to 20 degrees in public spaces, places like bus shelters, which are critical transportation hubs, and thereby protect frontline communities. The second company is ThriveLink. ThriveLink is transforming how people access social safety nets, with up to 90% of health outcomes determined by food, housing, and income stability. ThriveLink uses voice-powered AI to instantly connect people with the benefits they qualify for, things like Medicaid and SNAP. They are addressing a critical infrastructure gap at a time when these social safety nets access are eroding. These are exactly the type of impact-driven companies our economy needs more of. And they have 3 things in common. First, they are both enhancing economic resilience for low-income communities. Second, they are high-potential, growth-oriented ventures. And third, they each require a tailored strategy to scale their businesses. One is a hardware company selling into local governments. Another is a software company selling into hospital systems. They require a tailored growth strategy to really scale their impact. However, all too often, companies are forced into one of two buckets. Either blitz scale with venture capital or grow slowly with traditional debt. But most high-impact, growth-oriented businesses should not have to choose between these two options, which can jeopardize how their impact ultimately benefits end beneficiaries. And that's where our approach is different. We don't start by asking these companies, what capital do you need? Rather, we start by asking, what growth strategy will enable you to maximize your impact and your business success? And then how can we capitalize you accordingly? We use this approach by helping the companies really focus on profitability as an enabler to scale where it makes sense. Tailor our investment structures to meet the needs of companies using things like redeemable equity and revenue share alongside traditional equity, and use growth capital selectively as an accelerant to sustainable unit economics. We're putting this approach into action with our newest fund, JFFVentures, which is focused on investing in three key economic enablers: health equity, climate resilience, and economic inclusion. And we've been doing this for more than 15 years. We have supported more than 1,800 companies through our direct programs. We have facilitated 116 investments across $25 million in capital. And our companies have gone on to unlock $7.7 billion in follow-on funding. Our approach is unique in that we know these companies deeply. We support them the founders over months, helping them really refine their unit economics, evaluate their growth strategies, and build trusted relationships. We tailor our investment strategies to better meet the needs of the companies, and we invest in the top-tier companies for the long term, investing to build durable portfolios that drive impact and financial performance rather than relying on a single exit outcome. We have a diverse team with more than 60 years of combined experience across impact investing, finance, accounting, legal, and entrepreneurship. The future really relies on our ability to effectively support companies that are building sustainable, scalable solutions that are addressing real problems. If we want companies like ThriveLink and ThermoShade to succeed, we need to match capital and growth strategy. We're actively raising this fund. We've secured $1 million to date, and we invite you to join us in building this future. Thank you.